Okay, perfect. Hi, everybody. This is Taylor over at Legends. Today I am hopping on to discuss tax prep with everybody. Um, let's wait a couple seconds for some people to join in. Okay, so first thing first, let's just go over why we file our taxes, just basically. So you're almost certainly paying taxes if you work for a regular paycheck. Your employer takes out the taxes that you owe to the IRS from your earnings each pay period, and they send them to the federal, state government, Medicaid, wherever it goes, um, on your behalf so that you don't have to handle that part. If you don't get taxes taken out, it makes tax season way harder. um, but that's just the first step of the process. There's a lot more involved with filing taxes properly, so that's what we're doing today. So you're going to be asked to, when you get hired on, you're asked to complete a W-4 for your employer. The information on it determines how much in the way of taxes is withheld from your pay. Um, so if you mark dependents, if you mark that you're single or you have another job, another income, things like that, all of that is going to be listed on the W-4. All right, so every year, 2019, 2020, you're required to file a tax return. Um, the process determines whether or not you owe additional taxes beyond what you've already paid, or if the IRS actually owes your money um, back to you. But every year, the return is due about mid-April. April 15th, I believe, was in 2020. So it'll probably be, it'll be mid-April this year. Um, Mm. Even when you do your taxes, you might be able to reduce the taxes that you owe and get a refund for the ones you already paid for the federal, the state, what's the other one? Medicare, something like that. Social Security. But this is just by taking deductions and credits provided for in the tax code. Like for me, I'm a student, so anything I've paid towards school is going to be deducted, and then I'll receive a return for part of that. And medical expenses as well are, you can add those, and then the government will refund part of that to you. So, how to file a tax return? You can file it manually by completing Form 1040 according to instructions provided by the IRS, and then you'll mail the form back to the IRS along with any payment that you owe. You can also use a tax software program. These are really easy to use. They do step by step. I used them when I first started filing, such as TurboTax. I think there's another one called Tax USA. There's a lot of different websites. You would have to pay a fee most of the time. I believe TurboTax is free, but I recommend going ahead and paying for it because you'll you'll be able to put more information on your return, such as those medical expenses, school expenses, and without paying that, TurboTax doesn't allow as much access. So I recommend paying for tax software. And then the other thing is you can get professional help from an accountant or a tax professional. I do my taxes with a acquaintance of mine. She does my taxes every year. I pay her $50. It's super easy. I pay her after the fact, so I'm not like, um, so if my return doesn't come, it's nothing. So I recommend this. It is how I've gotten more for my return because they know what they're doing better than we do. So I highly recommend getting professional help from an accountant or a tax professional who will work with you to maximize your refund and fill out the tax return on your behalf. But the first option is free. Obviously, mailing in your tax return is going to be the cheapest option. If you go with the second option, you're probably going to have to pay a fee, although some programs offer free filing if your return is simple enough. When I worked at like a fast food restaurant, I just did TurboTax. It was really quick, really easy. But now that I work multiple jobs and I'm in school, I prefer to go to a professional because I have more things to put on my tax return. The third option, it's going to cost you money seeking professional help, but it's well worth it. Tax brackets are how much you pay in taxes. It begins with your total or gross income from all sources. You can then claim any deductions to which you're entitled to subtract from the total gross income. The federal government uses progressive tax system, which means that the higher your taxable income, the higher your effective tax rate will be. And these are determined by those tax brackets. For example, if you're in the 24% tax bracket for tax year 2021, if you're single and your taxable income was between 85,000 and 163,000, but only the portion of your income above 85,000 will be charged at that 24% rate. The IRS adjusts these taxable incomes amount annually for inflation. The tax year 2021, which you file for in 2022, the taxable income thresholds will increase to 86,000 and 164,000 for the 24% bracket. It's a little complicated. Even I don't understand it entirely. You can do more research on the tax bracket if you want, but I don't even make that income range. Um, anyway, so let's continue to how your taxes are calculated. Your employer is going to give you a W-2 form at the beginning of every year. Mine, I get electronically through ADP because that's how I'm paid. You may physically get it at my last job. I got a copy from my office manager. So just find out from your job who is going to give you that W-2. And it's after the close of the tax year if you have a regular job. The form details how much you were paid and how much is withheld from your pay for taxes. This information is then transferred to your tax return and determines how much you owe or are owed in taxes or in a refund. Just a quick note, self-employed people and independent contractors receive a 1099. These don't detail withholding because self-employed taxpayers are responsible for remitting their own taxes as the year goes on. So this is what I was talking about when taxes get really complicated, when your job doesn't take them out. If you are self-employed or an independent contractor, like a babysitter or you're a handyman, those taxes are not going to be taken out throughout the year. You're going to have to file them or send them to the IRS yourself. All right, so now we're going to go into reducing income with tax deductions. The amount of your income that's actually taxable can be reduced by claiming tax deductions. For example, you can subtract the amount of a gift you made to a qualifying charity or a nonprofit, and this is up to, I believe, 300 if you don't itemize the deductions. This doesn't mean that your total tax bill is reduced by the amount, but that your taxable income is reduced by that much, which in turn lowers your effective tax rate. You can't always deduct all of what you spend. Some itemized deductions, such as for medical expenses and charitable giving, are limited to percentages of your adjustable gross income. For example, you can only claim an itemized deduction for charitable giving for up to 60% of your adjustable gross income through 2019, but the CARES Act has waived this rule for the tax year 2020 in response to the coronavirus. You can deduct donations of up to 100% to your 2020 adjustable gross income. Tax filers can itemize their deductions, but there's also a standard deduction that often works out to more than the total of their itemized deductions for many filers. For the 2020 tax year, the standard deductions are $24,800 for those who are married and file joint returns, $12,400 for single taxpayers and those who are married but file separate returns. That would describe me and my husband. $18,650 for taxpayers who qualify as heads of household. And for the 2021 tax year, the standard deductions increased to $25,100 for those who are married and file joint returns, $12,550 for single taxpayers and those who are married but file separate returns, and $18,800 for taxpayers who qualify as heads of household. Okay, now we've gone over that. Let's go into the last section, which is reducing taxes owed with credits. While tax deductions reduce your taxable income, tax credits come directly off of what you owe the IRS. So this is going into those independent contractors, people that have their own businesses, things like that. The Internal Revenue Code provides for several tax credits, from the child tax credit for each of your child dependents to the earned income tax credit, which is designed to provide refunds to low-income taxpayers and families with children. And then just a little note here, refundable tax credits can sometimes result in if any balance is left over after reducing the taxes you owe to zero. You might owe the IRS $1,000 had you not claimed a $1,500 tax credit. The credit would erase your tax debt, and the IRS would send you a refund for the $500 balance if the credit was one of those that are refundable. The IRS would keep that $500 if the credit you claimed was one of those non-refundable ones, but at least it would erase your tax debt. Okay, so each credit comes with its own qualifying rules, and how you can claim them varies a little as well. For example, if you claim the child tax credit directly, and this is on line 19 of the 2020 Form 1040 tax return if you qualify, but others might be claimed on Schedule 3, which must accompany your 1040. You would then enter the totals from the Schedule 3 on lines 20 and 31 of your Form 1040, depending on whether the credits are refundable or non-refundable. Some tax credits, such as the additional child tax credit, require their own forms that help you calculate how much you're entitled to and show the IRS how you've arrived at that amount. The qualifying rules for tax credit, particularly the earned income credit, they can be a little complex. So check with a tax professional if you are a self-employed or a contractor, just so you can be absolutely sure that you can claim them and to be sure that you are paying your taxes, that you are not going to be behind with the IRS, because you don't want to be behind with the IRS. Okay, getting your refund. So you'll be able to determine your tax balance, whether you owe money or if you're owed, after you've entered all the relevant information about your income, deductions, and tax credits. You can send any money due to the IRS and the state's Department of Revenue, or you can use one of the online payment options provided by the IRS. Direct pay allows you to make a direct debit from your bank account payable to the IRS, and the agency accepts credit card payments online as well. You have a few options for receiving your payment if you're owed a refund, including a mailed check or direct deposit into a bank account. You can even divide your refund into separate bank accounts or use it to purchase savings bonds from the Treasury Department. And don't neglect to save a copy of your return for your records. It'll come in handy when you're doing your taxes next year. I have kept every one of mine since I started filing. Keep all of your documents through the year. If you make a charitable donation, if you buy something at school, if you pay for classes, if you get a student loan, if you get a grant, make sure you keep those documents for tax season. They are very important. I don't think I have anything else to go over. Are there any questions? All right, doesn't look like we have any questions. If y'all are a little bit confused about this video, I know taxes can get very complicated, but again, I highly recommend getting a tax professional or doing it online. It just simplifies the process. And when you do it online, don't use a free software. The free software is not going to give you all of that you need to deduct. So again, a big example is TurboTax. Everybody uses TurboTax, but they are not going to give you the lines to deduct things like mileage, medical expenses, student loans, things like that. So if you do use a tax software, make sure you pay the fee and find one with really good reviews that you're going to get the most for your income. Okay? Alrighty. Well, this is great, guys. I'm glad I could help out on the tax front. Please comment if you have any questions. I'll reply, and I will see you later this week. Thanks, guys. Bye.